Hey everyone, hopefully you're having a good day. My name's Andy. The channel's Finding Value. Today, we're going to do our daily technical analysis updated commodities, work our way through the dollar, yields, precious metals, and commodities ETFs that I follow. I'll interject my financial opinions as we go. And if you need help with anything, check out finding-value.com. That's where I dive deeper into all of these sectors, looking at individual companies for potential investment and sharing those companies with everyone. And yes, I do a little bit of fundamental analysis and technical analysis combined. Mayday is still an active coupon code if you're interested. MAYDAY, one word. So let's dive in there. Let's take a look, see what's going on today. Starting at the dollar. Dollar's still looking a little bit weak, most likely because of yields. As we've come on down, continuation pattern, flag pattern coming on down. Could be a continuation flag pattern. We could potentially still head lower towards that support zone, which is down in here of these intersecting supports coming across. So we're still looking a little bit on the weak side for the dollar. Yields are still continuing lower. This is the 2-year yield. It is selling right on that support level. When looking at this, what we look for is a break of the trend, and then we look for a break of other lower support. So we could probably come down here, and then we want to see if this holds. If that doesn't hold, then we break even lower. What this means is that most likely the Federal Reserve is going to lower interest rates if this continues on lower. It's also going to lead most likely to a weaker dollar. The 10-year yield is also heading lower. We've broken through support there, and it's looking pretty weak, like it wants to head to the downside. This will lead to weakness in the dollar. It will also lead to lower mortgage rates and lower lending. Interest rates in terms of lending for a lot of sectors and or people looking to buy homes. The 30-year yield also coming back pretty big today, down 1.86% on yields, and that does look like we could still head lower. TYX-TNX ratio, the curve inverted a little bit, but it's because the long end of the curve, the 10 and the 30, fell more than the 2-year. In this case, it was the 30-year falling more than the 10-year. So the yield curve dropped. The whole thing dropped, with the long end dropping more today than the short end. Bond prices are up, and this is where we could get a run here. You can see the trend line coming down, and we're breaking that trend line. So on the 10-year, you saw yields breaking lower. Bond prices are starting to break higher. Why does this matter? Who gives a crap, right? Well, if bonds break higher here and yields drop, this is what my guess would be. And this is what I've put money on and betting with. I think home builders are going to rip because we are still in a shortage of homes, but the affordability has held this thing down. So I think the housing market is going to rip. You're going to see XHB rip. But I've already positioned for it because we've been sitting on top of support. And everyone and their mom thinks we're going to go down in homes in the financial world. They're going to be wrong, in my opinion. And that's where you make all the money. I think precious metals are going to rip. They're going to rip when this yield curve drops, and it's probably going to go up with bonds. And that correlation has been quite good historically. So knowing what performs when is very good. And we could, if we see the dollar drop, we could see commodities get another lift off with the dollar dropping. So here's the 2 and 10-year yield. The yield curve came on down, squeezed up a little bit, came back down again, and now we're putting in potentially a bottom here. Big green candlestick where we could potentially invert or stay inverted here. Again, we'll continue to watch it and see if this thing uninverts. The critical spot is when the 2-year, which is at 4.426, goes below the 10-year, which is 4.163. So we're still inverted, but we're watching to see if this uninverts, and that's at a 1-to-1 relationship, which is here. That's what we're looking for, a potential dive lower than that. Gold is up $44 an ounce. It loves that lower dollar yield mix. Money, liquidity, money, it's coming. That's what it's pricing in. Strong, strong, strong. And I know people are trying to play the short term here. This isn't where you want to play the short term, guys. You should have been long back. Well, if you caught the bottom, good job. Long here on gold. That's when the yield curve inverted and has stayed inverted. Gold front runs the potential slowdown. So people position in it before it uninverts. So people were positioning in it here. That was your good entry point. Now you should be riding this thing, collecting really good returns on either the physical metal or the mining companies. Silver, it's also ripping higher, about 2% today, looking really good. Bullish engulfing, higher, higher, higher. And this is more or less just a sideways flag pattern, flapping in the wind, baby. We've got platinum up a little bit. It's still underneath that stinking trend line. Let's break out already. Now, if we do get a slowdown in the short term, platinum may not outperform silver in the very short term. Once that slowdown passes, I think platinum's going to rip. I think it's going to rip. And then palladium up, looks like a reversal candlestick. We've got support right where we're at. It bounced below it and came back up right at the support line now. And that is a reversal candlestick, a little hammer candlestick you can do some hammering with. And grab the handle there. So nice reversal. Here's the reversal there coming down and then reversing back up to support. So that's what we're looking at for palladium. GDX up 3.5%. It's ripping, baby. GDXJ ripping above resistance. Look at that thing. You better be on this train, guys. You better be on it. You better not be trying to trade short term. Just everybody on the website, we're all long, and we're just going to sit. We're going to sit, wait, get rich. SILJ also ripping, 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 ripping. Higher, higher, higher. And some of the companies are up over 100% now, well over 100% from the bottom-ish areas when we were buying. XEU to gold ratio continuing to work and put in work of the gold and silver mining companies outperforming gold. I see that continuing. It looks fantastic. Any time in the market from all the way back to 1984, this is the most bullish time in history since 1984 for gold and silver mining companies. You got to be crazy if you're not looking at them at a minimum. Crude oil down 1.27%. We're at that resistance line. We just keep getting hit there. I have a feeling that at some point when that dollar starts to drop a little bit, that we could punch through. But again, that's just a feeling. We'll have to wait and see. TTF gas up 4.7%. Looking like it's turning the corner here. That's looking pretty good. Let's see if we get some follow through here. And then nat gas in America, momentum still to the downside, just a small up day of about a 1%, but momentum still heading lower. With oil down, our boy XOP, yeah, you know me, is holding steady. This is really bullish. We've got the pattern here that we've broken to the upside. Higher, 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 higher. We need oil to get its butt moving. If oil comes and breaks out, XOP is going to be flying. It's going to be flying. OIH is already flying. It's like people know what's coming. And this is that rotation into energy and precious metals that you get when yields are about to drop. So here we go. This is the beginning of it. Nice big day, momentum day for OIH. Up 1.8%, looking fantastic. Newcastle coal up a little bit, but I think this looks fantastic, guys. Whenever you come out of these bottoms coming like this and you break out like that, usually you go sideways for a little bit, and then you start to put in these big green candlesticks. That is when I get excited. It's like, boom, right here, baby. Like, this is the spot to be loading up for a move higher. Profitable Uranium Trust, this thing's still, it's an ugly looking chart, guys. There's like no structure through this section there. But short term, there's some selling pressure. We can back out on it. We still have downside momentum. on the monthlies. And then on the weeklies, it still could be like a flag pattern where we drop down here. So get ready, guys. Get ready. We could still have some short-term weakness. Looking at URA, now the equities don't look that bad. They still look well poised to move higher. So maybe it's something to do with the Sprott physical uranium, the product itself. But that looks good. URNM doesn't look too bad. It's hanging on. And URNJ, it's got small down candlesticks, and we had a big surge higher. That's generally a bullish, formation, a bullish stance. So that's what I'm seeing there in the uranium sector at the moment. Copper pulling back a little bit. I figured it would go higher with weaker yields, but still pulling on back a little bit, still broken out through that downtrend line. COPX down a little bit too, but we're at major support here. That's all underneath us. Iron ore up a tad, and it's still working on that bottom there. We've got aluminum down 1.77%. Still looks weak, guys. We have further downside in aluminum. We've got nickel. That also looks pretty weak. Further downside in the short term. Momentum has not shifted yet. Moo ripping here, guys. Moo looks fantastic. We are going to rip in Moo. This is your bullish engulfing here. Right on support. That's your buy day right there. Everybody on the website, you guys know what I'm bullish, aka fertilizers. But yeah, this looks fantastic. I think we're going to rip here in those off that support level. Emerging markets, it likes the weaker dollar, weaker yields, and I do think that this is going to rip. It's going to RIP it if we continue to get weaker dollar, weaker yields. KRE is going to rip. Weaker yields, weaker dollar, up, 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 up. These are all the ones that are inflation sensitive. I grouped all the inflation sensitive ones together here. TAN is also higher, 3.77%. It could go on up. Same with lithium. It's liking the lower yields, lower dollar, and REMX, another one that likes lower yields, lower dollar. Baltic Dry Index, it's still holding steady here, looking good, right on support. It'll work its way on up. Another interest rate sensitive is XHB. This thing is ripping 5.76% higher. Look at this. Look at that move, guys. We went from about $98 to $115 in 1, 2, 3, 4, 5 days. And you guys think that we are in a housing, this huge housing slowdown. It's due to affordability, and this is what information is telling you. If you disagree with what I'm saying, you're disagreeing with the market here. They think if rates go down that we're going to go into some gigantic home building spree. I agree. That will be kind of the back half of the bull market. Energy is going to explode to the upside. Precious metals are going to explode. This is like 2002. When they lower yields, it'll be like 2002. And the dollar's going to get weaker. We're going to see emerging markets rip. Home builders are just going to rip. And there's going to be big returns there. Russell 2000 is also following that move. And it is breaking out. Boom, breakout. The S&P 500, I think, is going to slow down to some degree, even though it's been going on up, momentum still to the upside. But we have seen that slow down in some of these periods. Same with the NASDAQ. It's going to slow down potentially. The NASDAQ will be the most sensitive, in my opinion. SMCI down a little bit, but still poised all right. It's still okay. And then NVIDIA is also down. And these are the ones that are going to get hit. All these tech companies. That's the rotation. There'll be a slowdown in tech. They'll lower rates if it's like the year 2000, 2001. And then we're going to see a weaker dollar, and then we'll see emerging markets, home builders, all those things. They'll just rip. Rip, rip, rip. BTC is still going up, looking pretty good, actually. Pretty strong candlestick there. Ethereum, little bloody nose. Momentum still to the upside for Ethereum. But that's what I've got for today, guys. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. And that's all I've got, guys. So We'll catch you next time. This is Finding Value.